Hi there, I'm Jeff Whedon, CEO at Forager Funds Management. I'm here with Steve Johnson, our Chief Investment Officer. We're talking the international fund today and particularly the Italian banking sector. Steve, you've been taking a look at the sector. What's been going on?
We have been following it quite closely, and it's been a transformational 6 months for the Italian banking sector. This is one of the most overbanked economies in the world. There are more than 500 banks in Italy, and historically, they've all been very, very small. So that you didn't have that situation like you have in Australia or the UK with a dominant core banking sector. That hasn't gone as far as Australia or the UK over the past 6 months, but it has changed a lot. In January, the sixth largest bank in Italy, Banca, announced that it had acquired 2 other banks from the Italian Rescue Fund. The past few weeks, Italy's largest bank, Intesa Sanpaolo, has bought another 2 smaller competitors in the space. And then just a few days ago, we saw the Italian government announce that it had recapitalised Italy's oldest bank, MPS, and that it will be back trading on the stock exchange towards the end of this year. So we've seen a lot of consolidation, we've seen a lot of restructuring, we've finally seen them writing their bad loans on the balance sheet to appropriate levels, and I think that has set the sector up for a much more profitable future.
I've noticed looking at the top 5 holdings, Forager isn't just taking a passing interest in this. Forager, the International Shares Fund, now actually owns a bank.
Yes, that bank I mentioned earlier, it's called Banca, and we initially got interested in the sector because of the announcement that it made that it had bought 2 of these competitor banks for the grand total of €1. Shareholders have had to put some capital in, so it's not a zero-sum game. They've raised 400 million of new capital, which we participated in, and that has capitalised them to take on these new banks. But it's a really, really good deal. They've left behind a lot of the loans that they don't want. The Italian government recapitalised the banks before they brought them on board, and most importantly, it has consolidated the industry. Banca has a very, very clear plan for getting to a 10% return on equity in 2020. When we bought it, it was trading at 1/3 of book value. I think it will trade at book value if it can earn that 10% return on equity, and that would involve us making 2 or 3 times our money. The share price has run up quite a bit lately. We had a decent swing at it to start with, so it was a fairly large position for us initially, and that's grown to an even larger position. But we're really happy with the way the sector and this particular bank are unfolding.
Steve, that's terrific. While we're talking the International Shares Fund, what's been happening in the US?
Yeah, we've been selling a lot of our holdings in the US. We've been selling a lot in Europe as well, but particularly in the US, we've had a number of stocks there trade up to what we think is fair value. Investors probably read about a few of them over the past year, but we've sold eBay, we've sold Cable One, we've sold Sotheby's over the past year, and we've been replacing those ideas as they've matured with a few new ones.
So what ideas have they been in the US that you've acted on? Service station convenience stores?
Yeah, we've added a few new stocks. One that shares a lot of similarities with Australian company Invocare. We'll talk about that probably in the next quarterly report or perhaps later in the year. But the one that's in this latest quarterly report is Murphy USA, which is an operator of petrol stations in the US. Most of its business is actually in Walmart car parks. They run very high volume, very low cost service stations in Walmart car parks. They've been growing and diversifying outside of that particular relationship. We think it's a good management team, a well-run business that has some cost advantages over some of the competitors. It sold off a lot because of some short-term issues, and we think we're able to pick up the stock at an attractive price. This is not something we expect to triple or quadruple over time, but we think it's a pretty safe sort of 9-10% return per annum stock.
Thanks, Steve. For more about what's been happening in the Forager International Shares Fund, check out our latest quarterly report.